Ron Barron is, of course, one of the most outspoken Tesla investors and bulls out there in the market. And look, whether he's right or wrong about Tesla, at least he puts his money where his mouth is and invests billions of dollars in the stock. Well, most recently, the billionaire investor made a wild prediction that Tesla's market cap will reach $4.5 trillion with a T, trillion dollars by 2030, which, to put that into context, that would not only be worth more than Google or Microsoft or Amazon, but it would actually be worth more than all three of those giant behemoths combined, which is just insane to think about. Well, in today's video, we're gonna dive deep into that insanity and break down exactly why he thinks that Tesla can achieve this. I'll show you what different types of investments would be worth if Tesla does make it there, and I'll even give you my own personal thoughts on how likely I think it all is based on all the information that we have right now, as well as the future potential. So I think this is a really fun topic to discuss here. Let me know your thoughts down below as we run through it, but I hope you guys enjoy the video. Let's just go ahead and dive straight into it. Okay, now just for some context here, Tesla stock is currently trading at right around $200 a share. It's been kind of bouncing around recently, but that's mostly where it's been, right around 200. So we'll just use that as our baseline for these calculations. It'll make it easier and simple going forward. And for the market cap, it's also been jumping around 600 billion. So we'll just keep it simple with that here too. We'll go with 600 billion for the market cap. But from here though, Ron predicts that, well, actually, first let me just say who Ron Barron is. So he's the founder and CEO of Barron Funds, which holds around $60 billion in assets under management and has grown from just $100 million in 1992. But since then, Barron has earned a whopping $52 billion in gains, which is very impressive. So he's definitely a well-known, very reputable long-term investor, really one of the best out there. And when it comes to Tesla, he just recently held an interview with CNBC last week where he told them that he thinks it can reach $1,500 a share with a $4.5 trillion market cap by 2030. Now, let's start here by putting some of these numbers up on a chart to see what this all means. So from $200 a share up to $1,500, that would be an increase of 7.5 times that amount. And from a $600 billion market cap up to $4.5 trillion, that would also be right around an increase of 7.5 times as well. So what would different investments in the stock today look like in the future? Well, if you were to buy just $10 worth of Tesla stock using fractional shares, it would then be worth around $75. If you bought $100, it would be worth $750. If you bought 1,000, basically 5 whole shares, it would be worth $7,500. And if you bought $10,000, it would be worth $75,000. And if you were a big baller and bought $100,000 worth of Tesla stock, you would then have $750,000. And what really just gets super crazy is if any of you happen to be a millionaire and you were able to throw $1 million into the stock, well, if Ron Barron is correct, you would end up with well over $7 million. And then you could easily retire and spend the rest of your life doing anything you want with financial freedom, which is what we all basically want. So you can really see the power here in some of this. Now, if you're curious about what this would mean for Ron Barron himself, well, it's estimated that he has around $4 billion invested in Tesla stock across his various funds. And if his predictions are correct, that $4 billion would skyrocket to around $30 billion, which, if you think that's crazy, remember, he has around $60 billion in assets under management. So that would be half of all the fund's assets. How crazy is that? That would be gigantic gains for the fund. But again, even just in smaller amounts, you're talking about huge gains here that could potentially change someone's life in a big way. And we'd all really just love to see even just one of our stocks jump up by around 700%. That would be huge. And I'm personally up over 1,000% just on my own position, but seeing it climb another 700% from here, that would be amazing. And of course, I'd be extremely happy about that. But having said all of that, how realistic is all of this in the first place? And why does Ron think that it can actually reach those levels? Well, it's actually pretty simple. In fact, Ron believes that Tesla can reach these goals without even their energy, their battery, their robotics, and their autonomous driving businesses. He thinks Tesla can do this with just their raw vehicle sales alone, which is just even more crazy to think about. But here's how he calculates it. So, in order to reach that valuation, Ron says that Tesla will need to sell over 20 million vehicles per year. And on average, they need to sell for around $50,000 each. Doesn't mean there won't be models below or above that price, but just on average, they need to be around that $50,000 mark. And if they're able to hit that goal, then it would generate around $1 trillion in sales. So considering that he wants the market cap to be 4.5 trillion, that would equate to a price to sales ratio of about 4.5, which I'll come back to later when we look at the valuation and how realistic these numbers are. But taking a quick look at profits, Ron estimates that on that 1 trillion in revenue, they'll maintain profit margins of around 30%, in which case it would equate to around $300 billion of operating profit. And so if you have that $4.5 trillion market cap, then you should end up with a price to profit ratio of about 15. Okay, so now we know all the numbers that they need to hit: 20 million vehicles, 50,000 average price, 30% margins, price of sales 4.5, price of profit 15. Let's now see how realistic all of this is and if Tesla could even achieve it. Well, starting first with the 20 million cars, this is clearly the hardest part of the entire equation, because if Tesla can hit just that number alone, then everything else will be pretty darn easy. But this is clearly the biggest hurdle that everything depends on. And yeah, it's gonna be tough. Now, as of last year, Tesla was able to sell just above 1.3 million vehicles. So that means that they would have to increase not only their vehicle production, but also their vehicle sales by around 15 times what they do today. As unbelievably hard as that sounds, though, it's not entirely impossible. Tesla has been known to have huge growth spurts in the past, like almost doubling their sales in 2021 and generating almost as many deliveries in 2022 as the entire output of 2012 to 2020 combined. And if every year going forward was as amazing as 2021, where they nearly doubled their sales, then they would actually hit 20 million much earlier by 2026. Of course, that's not at all realistic now because of how much larger they are today. So maintaining that type of growth would be almost impossible. But if, however, they were at least able to generate half of that growth at around 50% per year, well, that would also hit the mark early at 2029. And the absolute lowest growth acceptable would be around 40% per year, which would get them right above 20 million by 2030. How likely is that though? Well, not very. According to more than 30 analysts on Yahoo Finance, Tesla is expected to grow their sales by less than 30% in each of the next 2 years, which is well short of the 40% mark that they need. Now, it is possible that Tesla just becomes the world's biggest vehicle brand and they start stealing a giant amount of market share from other giants, but it would take some pretty incredible numbers. As of right now, there are close to 80 million vehicles being sold worldwide, so Tesla would need to conquer about a quarter of the entire market. Basically, out of every 4 new cars you see on the road, one of them would have to be a Tesla. Now, as crazy as that sounds, Toyota alone sells over 10 million vehicles per year, so they would just have to do double the sales of Toyota. And considering that EVs are the future of the auto industry and that Tesla completely dominates that market, maybe it's not as possible as we think. In fact, even Elon Musk has gone on record saying that he thinks they could hit over 20 million by 2030. But currently, Tesla has 0 non-luxury EVs on the road, yet despite that, they still control over 65% market share of the EV market just with their luxury vehicles alone, which is pretty incredible. That's with 0 non-luxury EVs on the road. So just imagine the dominance that they would have if they also launched a cheaper mass market vehicle. Well, it just so happens that after delaying that project in the past, Elon Musk is now shifting his engineering team's focus over to working on their next generation EV platform that is set to be half the price of the Model 3 and the Model Y platform, thus enabling them to finally build that $25,000 mass market vehicle that was part of Elon's master plan all along. And you guys know that a $25,000 Tesla would sell like absolute hotcakes, considering that they already sell every single vehicle they can make. Still, even with all of that in mind, I still think that Ron's estimates here are just a bit too ambitious for Tesla to actually hit these numbers in such a short amount of time. There is, however, one other way though that I do actually think Tesla could hit at least the $1 trillion revenue mark, which would actually keep Ron's entire valuation thesis here still intact. But it would require Tesla's other businesses to help and pitch in, most of which, though, I actually think have huge future potential and could actually do that. For example, they have the autonomous driving semi-truck for logistics, which is a market that is worth trillions of dollars. They have a planned robotaxi service for next year that would not only sell more vehicles for them, but also generate recurring revenue, and that's a market that is expected to more than double in size on average through 2030, and that already had 160,000 users of their full self-driving beta program last year, which is probably a lot more now, and that's on top of every other Tesla out on the road that is constantly collecting valuable data for them. So they're going to have a pretty big lead in autonomous driving. They also have their energy and storage business, which I think will become more important over time since solar energy really needs to be stored in order to be available when you actually need it. And they even have more obscure products like the Tesla Bot that could potentially surprise everyone in the distant future, especially in the workforce and service markets, as the service robotics market alone is expected to grow at over 20% per year, reaching over $150 billion by 2030. So while they may not be able to hit that 20 million vehicle target by 2030, I do think that they can actually supplement that with revenue from other parts of their business, which, by the way, I think most of those will even have huge profit margins too, because they can sell all kinds of services for logistics, autonomous driving, robo-taxis, the bot. A lot of those could actually have, pretty strong recurring revenues. And moving on down the list, everything else from here I think would actually be super easy. The $50,000 average price for vehicles can not only be supplemented with those software add-ons that I mentioned, but they're still going to have more luxury EVs too for people that want to pay for those, and those are going to command much higher prices, so it can average out better. And that's even if they have a cheaper mass market vehicle. I think they can still average out $50,000 per vehicle. I think that would actually be the very bottom of what they would charge on average. When looking at margins, I also think 30% should be very easy to maintain since Tesla already generates gross profit margins above 20%, which have also been close to 30% in the past and even hit 33% for automotive margins too, which is unheard of in the auto industry. In fact, they generate nearly 5 times the profit per car of legacy players like Ford, GM, and Toyota, which is pretty crazy. And as they grow their business and offer even more services, I think they'll get closer and closer to those pretty high software-like margins that Tesla bulls are always talking about for the future. So at 30%, that's not really a concern at all in my opinion. That does, however, leave us now with the final question, and that would be if the valuation makes any sense at a price of sales of 4.5 and a price of profit of 15. Well, if you go by today's standards, I think it definitely should make sense. Tesla stock currently trades for a price to sales ratio of above 8, so almost double what Ron calls for based on sales. And when looking at profits, it's very similar, but it also gets a little tricky here because Ron is quoted in saying a multiple of 15 times operating profits, but he doesn't really specify if that's operating income, operating cash flow, or maybe just gross profit. But regardless, at a multiple of 15, Tesla would still be way cheaper than all of those metrics by today's standards, as they currently trade for a price to earnings ratio of 54, a price to operating income of 43, a price to operating cash flow of 40, and even at the lowest metric, the price to gross profit is still almost about double at almost 30. So no matter what metric you use, Tesla stock is currently trading for at least double the valuation that Ron thinks Tesla would have in 2030. And so in conclusion, I don't think that what Ron is calling for here is absolutely impossible. I think it's extremely hard and especially, very unlikely just based on vehicle sales alone. I think Ron is just too bullish on the Tesla brand, thinking that it would sell that extremely well in such a short amount of time. And I also just can't imagine Tesla's market cap being that large at over $4 trillion. I just don't see the same type of value there as some other giant tech behemoths. But I think that when you start to supplement the revenue with other parts of the business, then I think Ron's estimates do start to look a little more reasonable. And look, even if Tesla was able to achieve even just like half of what Ron Barron is expecting here, you would still be talking about huge gains on the stock. I mean, it would probably increase by like 2 to 5 times by 2030, which would be huge gains, and we'd all be extremely happy with it if we were investing in Tesla stock. So as a long-term investor in Tesla, I am bullish. I'm not at the level of Ron Barron, but I want to tame my expectations a little bit. And even if Tesla stock was able to just double up in size by 2030, I would still be extremely happy with it. And that's kind of what I'm aiming for. Anywhere between 2 to 5 times larger would be fantastic performance for me. So what do you guys think? Are you more with Ron on this one? You think it's going to surge by such a huge amount by 2030 because it has so much potential and you're that bullish on it? Or are you more kind of on my side where you're trying to be a little more cautious with it, and even just doubling up in size, tripling, somewhere around that range would still be fantastic? Or do you think that Tesla stock is overhyped, overvalued, and you just wouldn't even invest in Tesla to begin with? I would love to hear your thoughts. Regardless what your opinion is, all opinions are welcome here. But thank you so much for stopping by. Let me know what you think down below. I hope you're all doing well, my friends, and I will catch you in the next video. Take care, everybody. Bye-bye.